Hey guys, this is Chris Mincola with the Mincola Group over at West USA Realty, and I'm alone today, so you just get me. Hope that's good enough. And we are going to be talking about a few topics just to kind of summarize some things going on in the market right now, some things you need to know that you may not know that maybe we covered before, but you missed, or just to kind of emphasize, and also where we're looking at the next month to a year. So some things that we're seeing that are issues going forward with, a lot of people that we're encountering, and I've heard this, and I've encountered it myself. I've heard it from other loan officers and title people, and that is the whole idea of buying a home and the starter home has gone out the window. And I think that's a lot to do with HGTV, which, by the way, a lot of that stuff that you see on there, it's a lot of fun. I like to watch it too, but it's a lot of stuff that's not really in reality in a lot of people's wheelhouses. Let's just put it that way. I'm going to be real nice about it. So what we need to do is kind of look at reality, where we are now. And the answer that sometimes we get from a lot of home buyers right now is that, well, if I can't get what I want to get now, I'm just going to wait. And I'm like, I'm not understanding what you're going to wait for. Now, in some circumstances, it may make sense to pay down some high credit card debt, and you may have to qualify for a home loan anyway, and that's great, and you don't want to pay that extra high interest rates on those credit cards for sure, and you might want to go a little bit higher in your credit score. But the feds, here's the deal, guys. The feds are talking about raising rates next month and 3 times next year. Today, just today, looking at it right now, I got it pulled up right here, 30-year, fixed rate is right around 4.7, and a 15-year is 4.3. A year ago, we were looking at right around 1% less, about a year and a half ago, when we had the Brexit effect and everything that happened there. So, guys, interest rates have gone up as promised. As the economy stays steadily good, we're going to see it go up more, and they're forecasting it. Now, a lot of people are hoping the Fed slow that down. I wouldn't count on it. Sometimes interest rates doesn't always equate to the idea that, mortgage rates are going to go up. They could be rates in other areas. But we're looking at about where we are now. We're looking at about the forecast of about 5.8 to 5.9 by the end of next year. So what that means for you, 1% higher from where we are now, from let's say 4.7, let's say we're at 1 point higher. They're saying 5.8 to 5.9 or so. I double checked that with Evan Einhorn, our preferred lender over at Modern Home Lending, today before I got on. And, you're looking at about 10% more in a payment, 10% more in that home that you're going to buy this time next year. So what that means is, if you take that on a $200,000 or $300,000 house, it doesn't take you long to do the math. Unless you're getting a super high windfall, or you're paying down a ton of high interest debt and increasing your income that much more, and then some, so you're not looking at this, the same type properties or less this time next year, you need to get ahead of that game. So how do you do that? Well, I know for myself, back in 2011 when prices were rock bottom, and they've been going up steadily since then, I wanted to get in the equity game big time. And so, one of the things that I did was I went out and bought a new home. Now, did you know that you can actually rent to own a brand new home today with a 560 to 580 credit score? You can. You really can. For a brand new home, we've got a program with Evan Einhorn at Modern Home Lending where you can rent to own a home that's brand new or that you have built, and he can get you set up with that with a 560 to 580 credit score. And, after 3 years, actually 3 to 5 years, if you're not happy with that property, you can opt out of it. Yeah, you can opt out of it. So, for about the same amount of money that you're going to pay for deposits on somebody else's rental to make them money and throw money out of your hard-earned money out the window, you can get a brand new home or something that's even, 10 years old, or that's been a complete remodel for rent to own. Also, the same goes for our down payment assistance programs that we have. So these are solutions to this idea that, I can't buy a home. And if your credit scores are lower than that, Evan can get them boosted up fairly quickly with some free credit counsel for you. And once we have that information, we can go out and target the home you're looking for and get it done. Now, this idea that I've got to have the McMansion right off the bat and I can't have a starter home, and that goes for even the new homes. You may not get in the exact area you want. You may not get the, supersized home you want right off the bat. But, guys, Rome wasn't built in a day either. And for a lot of people, who think long-term strategies, one of the things to think about is if I get in a home now, in 2-3 years, or whatever it is, I can then move on, take that equity out, move on to whatever I want. Yeah, but Chris, what if the market's Well, in our area, in the Phoenix area, we expect after the rates go up again next year, those 3 extra rates, and then in December this year, we'll probably see a little bit of a leveling off. But we've got 500,000 people moving here just in the next, get this is the forecast right now, just in the next 4 to 6 years, we're looking at about 500,000 people, 500,000 more jobs moving into the valley, and about 1 million more people moving into the valley. So that's in just the next 4 to 6 years. Does that sound like our housing market is going to slow down? Well, maybe if people are going to live in tents, okay, that may be the way to go. So my point is, we can help you be strategic about it too, and look at certain areas that are definitely going to go up in value. But and again, nobody's got a crystal ball to know exactly what's going to happen. But over time, real estate has never failed. Even with the crash, like I said, 2011 to now, we're over over those levels where people were, and pretty much most cases around the valley here. Again, we're not in Detroit, but most areas around the valley, people are over that where they were at that crash level to sell their home. And that's another thing. If you're thinking about selling your home, now's a great time with interest rates going up. Prices have gone up. We're over the peak of the crash. So it's really a good time to think about these strategies, because just renting, at least rent to own, just to rent is throwing money down the barrel. I mean, it is just a waste of your time, and I don't want to see you waste your time. Think of the home as a forced savings. You gain that equity, you get it out, and then you go closer to your work. You go closer to your family and friends, and you get the bigger home that you want, okay? Guys, this isn't rocket science. You could then even put in a pool or do whatever it is you want to do. But you've got to make a move now. Otherwise, home prices are not going to, we're not going to see a plummet here in the valley. We're not looking at interest rates coming down anytime soon. So let's get on the mark. Let's start thinking smart. So let's think starter home. We got to drive an extra 15, 20 minutes. We got to do it, okay? Just, that's what a lot of people had to do when they started out with their home purchase. A little bit smaller home now, we buy the kids bunk beds. In a couple of years, we'll get them their own room, okay? I know growing up, I don't remember too many people that had their own bedrooms, but it's just, I'm not saying we shouldn't go for that, but again, that's the whole point. We want to go for that. We don't want to be in the same place or worse in 2 or 3 years than we are now. It's ridiculous. It's ridiculous. We want the McMansion or nothing. We're going to keep renting and throwing our money down the tube. Let's stop it, guys. It's ridiculous. Let's stop it. So some solutions to this. We got down payment assistance. We got rent to own. Yes, you can get a complete grant or a partial grant, or maybe even a second loan if you got really poor credit on your home in order to get that down payment taken care of. So that hurdle is taken care of. You only need a 620 credit score to get full down payment assistance, 580 to get partial. So again, we're talking about the amount of money it would cost you for deposits on a rental at 580 to still get into a home with an FHA loan. A no-brainer. I'm going to rent to own with our rent to own program versus not having the possibility to own. And over that period, I'm gaining equity. I have the lower price locked in on the home. I can take that equity, put it towards my down payment, and I've got 3 to 5 years to do it. What are we doing, guys? Here's another tip for you. You know what? You don't have to buy the McMansion off the bat and everything that's bells and whistles when you walk through the door. But guess what? You still can in a way, because we have what are called renovation loans. So let's say we find you a place in the valley that's at a lower price because it needs some work. Well, renovation loans that we're talking about could be anywhere from $5,000 minimum on up to, sky's the limit on the FHA Max or conventional Max program, which are going to be well, right now FHA is high 200, so like 294, 305 by the time you do your down payment. But we're looking at an increase here probably in about another month or two, hopefully, on FHA, which is going to put us well over 300,000, probably closer to 315, 320-ish. And then conventionals are going to be, of course, well into the 400,000. So with those renovation loans that we can work on with you on that for a property that maybe isn't up to snuff yet, even for just cosmetic stuff, okay? We're not just talking about you're going to fall through the floor here, guys. We're talking about like you want stuff done to the countertops, cabinets. You want that pool in the back that needs fixing in the home that you just bought that looks like garbage right now, fixed up. You want, instead of chain link fence, you want a block wall around your house. These renovation loans allow you to do all these things, flooring, paint. Okay, there's so many, the list goes on and on. So let's get you into something that's a little bit lower price, get you a good deal on it, okay? It doesn't have everything you want. Maybe it doesn't even look like a junker, but you just want to get it more up to date or more of that high-end look. You can do that with these renovation loans, okay? So the way they work is, we get you in for that lower end of the loan, and then whatever's left on what you're qualified for, we get you in for that. Evan, with Modern Home Lending, even has renovation loans where he gets you, renovations done that you want to have done on the property, even cosmetic stuff. And he even has one where it takes care of your down payment besides the renovations. So again, why are we renting? What are we doing? Unless you're getting massive income increases at your job, or you own your own business and you're you're increasing your income every month by just crazy amounts, you're not going to outpace the interest rates and the housing market in our area anyway going up. You aren't going to do it unless you're going to add maybe 2 or 3 other people to your loan. Okay, guys? It's just ridiculous. It's like this thing, well, I'll just wait then. Wait for what? For the poorhouse? Guys, it's not rocket science. You need to sit down with Evan and I. We'll go through the details. We'll make the numbers work. Again, if you're paying down, high interest credit cards and things like that, I get it. One other thing that comes up, and even with the high interest rate credit cards, we can talk about that too and how we can work around that. But, we also get this thing where people think, I've got to have all this money saved up in case something goes wrong with the house. And again, it's great to have money saved up, or have money in your 401ks and money, and all kinds of investments and stuff. But, there's this thing that we've talked about before many times. It's called a home warranty, not homeowner's insurance, which you're going to have on your mortgage anyway. You pay that as part of your mortgage every month anyway. But this thing is called a home warranty. I know a lot of parts of, I don't know why, certain parts of the country, it's like an unknown. Here in Arizona, it's pretty big, but we've got tons of different warranty companies that we would recommend to you. And those companies, basically for anywhere from, let's say, now at current prices, let's say in the 400 to 500 mark per year, 400 to 500 mark, on up to maybe 800, 900 at the most, you can have a Cadillac version of, if something goes wrong with your refrigerator, brand new refrigerator goes out, and those things are computerized now, right? I've had it happen to mine, and you call them up, service fee is maybe $65 on top of the 500 or 800 that you paid for the whole year. And a lot of times we can get that included into the home. If it's a brand new home, all this stuff's going to be covered anyway. But a lot of times we can negotiate the home warranty into the deal along with your closing costs, which is something else that we normally negotiate in anyway if you're not covering it yourself, so not to worry. But basically, that home warranty covers, appliances, garbage, garbage disposal, electrical, plumbing, all the mechanicals of the house. So think of it this way: your insurance takes care of, natural disasters, or the dishwasher overflows and damages your cabinets. and the home warranty comes in, fixes or replaces, fix or replace. You want a home warranty that does fix or replace. Fix or replaces that dishwasher, and any insurance would come in to help fix the cabinets or drywall or whatever it is that's been damaged. But the idea here of this home warranty takes care of this fallacy, this idea that, oh, I've got to have thousands of dollars saved up in order to own a home, and I've got to have all this money for a down payment, and guys, stop. And I know no one wants to talk about their financial situation, but you need to sit down, talk with us, talk with Evan, our preferred lender, Evan Einhorn with Modern Home Lending, 602-456-2273, and he'll go through a quick phone app with you, and then he'll want to go through either in person, he can do that too, or online, and then he'll want some documentation just to back everything up. So it's a solid pre-approval. We don't end up with any issues later. Get you on a fixed interest rate, and we start making you money with your home rather than throwing money out the window and making the landlord rich. Let's stop it, okay? Let's stop it. Let's get educated. Let's get the information, guys. Let's think about starter home. Let's think about the ways we can do that. Renovation, DPA, rent to own, okay? And also, one other thing you want to do now, rather than waiting until you go to file your taxes, because we got tax season coming up right around the corner. By the way, don't spend a fortune during the holidays either if you're getting ready to buy a house. Dumb, okay? Dumb. You don't want to put a ton of money on your credit cards. Think of the house as the Christmas gift, okay? For the whole family. Let's take it easy this year. And think ahead towards tax season. It's only going to be, a month away? So here's the deal. You want to talk to Evan before you get your W-2s or start filing your taxes, because Evan will tell you now what you need to do to get your credit fixed up, if anything, and maybe some tricks on the taxes. So that way, again, targeting for the pre-approval for the home loan, he can help you out. Let's not try to do everything on our own and go, to FICA.com and no. We don't need to figure all this out on our own, guys. We've got people that do it, and we close deals every day, and people are happy about it in our world. So let's get out there. Let's contact Evan. Call or text Evan 602-456-2273, or you can call us if you have any questions. My wife Cynthia and I and our team here at 480-788-8569. I'm Chris Mincola with the Mincola Group at West USA Realty. You can also check us out at mincolagroup.com or mincolahomes.com. Let me see if I covered everything I wanted to. Yep, I think I did. Anybody got any questions, guys? Thanks for joining me. Thanks for joining Ramon, Anna, Trevor. Hey, what's going on, guy? Stacy, Tammy, how's it going? So we've got a lot of people joining us today. Thanks for joining us. I really, really, really want to stress this, guys. I know a lot of people aren't, comfortable about talking about finances. Maybe you don't want to do it over the phone. Let's set up a meeting at my office, at Evan's office, and let's get this done the right way. Let's get you guys on track in 2019 for, getting into a new home or a resale home. You can get that thing renovated with one of our renovation loans, get your down payment taken care of, or not quite ready yet, not sure if you might be moving the next year or two. Maybe you're in flux with jobs or family situations and you just want to rent. Because of that reason, rent to own, at least you're gaining the equity, but you got the easy out, okay, where you can still gain that equity and get it out of there at that point and keep the lower interest rates that are available at this time. So, historically, interest rates run around 7%. I know that's where the Fed is heading. That's where they want to head. Obviously, that historically speaking, that's where they would be right around 7% on average. So we're still low, although some people are feeling somewhat of a crunch there on that. We're probably not going to see too much of a lull again until the end of next year once we get through another cycle of these increases. But they are coming, along with home prices in our area anyway, are going up. In the Phoenix metropolitan area, they are going up. So let's get on board, guys. And for those sellers out there, when interest rates go up, and you've got the equity there, that's your cue to get moving. If you're thinking about moving at all, okay, we can help you figure out where you might move to next, get that all figured out. We want you to talk to Evan if you're going to need a home loan, and get that all figured out now, because again, before tax season, let's talk about all that. Let us get the home evaluation done in person at your house. Have you talk to Evan so we know what those numbers are like, link up the equity with the loan if we need the loan, and get this all figured out for you. So 2019 is a huge year for everybody. Guys, if you do live in other states, we do have other realtors and lenders in other states also. So, and Evan, I believe, is licensed in California now, and also in Georgia, and maybe North Carolina, I think. But we can get you set up in any state, any area you are. I can get you a good realtor that we work with and a good lender in those areas of the country or wherever you are. So again, Chris Mincola, 480-788-8569. Evan Einhorn, 602-456-2273. And that's Evan Einhorn, and it's modernhomelending.com or mincolagroup.com and mincolahomes.com. See you guys next time, next Wednesday.